Hello guys, a very good evening. It is 5:30 p.m. Our FR class is scheduled from 5:30 to 8:30 p.m., right? And again, I will just brief you on how the class is structured, how is the class going to be, so that you have the habit, okay? Uh, right. What I am going to do, how I teach. I don't know how many of you attended the demo, but again, the class is going to be very, very simple. Okay. First 10 minutes, I will be uh, basically asking questions from the previous class. Okay, so from the previous class, I will ask you questions. But today being the first class, there is no concept of asking questions from the previous class. So basically in these first 10 minutes, I will introduce myself and how we're going to have the classes structured. That's what I'm going to do until 5:40. Right? And then after that, what happens? Now, this is so that if somebody is watching the recorded session, they know that from 5:30 to 5:40 questions are asked. So they can just kind of like move ahead, move forward without like they know what is taught. They know how it is. So first 10 minutes will be questions from the previous class. Then I will teach. Okay. So I will teach for 1 hour, 15 minutes, after which there will be a 10-minute break. Let me just recheck when the break is. All those details will be shared with you today. So I will be teaching, then there will be a 10-minute break. Then again, I will teach. And in the last 10 minutes, I will allow you to review. Let me just check with my team. When is the break scheduled? What time is the break scheduled for this batch? 5:30 to 5:40 is the first 10 minutes. Break is at what? 6:55. So 7:05. Yes. So guys, always your break is going to be from 6:55 p.m. to 7:05 p.m. Okay. So we will start from 5:40 to 6:55 p.m. I will be teaching, and then 7:05 to 7:15 onwards to 8:20, I will again be teaching. 8:20, I will stop and give you the last 10 minutes to review everything we have done. This is how the class is structured. This is how every class will be. The break will not be given 1 minute late or 1 minute early. It will be exactly, we will follow the exact same format, right? Now, again, if for those of you who did not attend the demo, for those of you who don't know me, my name is Shaz Faruqi. Okay. And I've been teaching from over almost a decade now, right? And I've taught all the batches, all the papers, right? And here the agenda is that you can attend classes live. But if you miss a class, you have access to the LMS where you can watch the recordings, right? So here I have quite a lot, about a good number of them who haven't joined, who I'm expecting that they'll watch the recordings, right? And again, what happens, how it's going to be is basically, again, I did mention this in the demo, but the topics that will be covered in that specific day will be on the screen in front of you, right? It will be on the screen, it will be there in front of you. And as and when I complete a certain topic, I will be marking that topic in green. I know a couple of them we did look at in the demo, but because it is the first class and because I want to make sure that everybody is understanding, I will ensure that that is done. Okay. So that is how it's going to be. And of course, yes, we will be solving exam kit questions as well, whether it's the study hub practice questions, whether it is the Kaplan kit questions, whether it is the BPP questions, we will be solving them in class. And once a week, you will do a written test also, right? There will be a written test for you to do because obviously we need to make sure that you are well prepared for the exam. Now, when it comes to the attendance, we have a system of tracking who is present, who is not present, who is watching the recordings, who is not watching the recordings. Right now, a couple of names. I mean, obviously, I can see the ones who are present, but at the same time, I can also see the ones who are not present. For example, there is Simran Acharya, who is registered but isn't present. There is Shagufta Siana, right? Sandhya Kandel, right? So I can see how many are present, how many are absent. And obviously on the LMS also we can track how many are watching the recordings, for how long you're watching the recordings and so on, right? And accordingly the tests, obviously we will, it's the same thing for the tests as well. Okay, now I have another 2 minutes. So just to make sure, let me just call out names. Again, if you're attending the class online, then you are obviously expected to have a mic and a proper internet connection. So Ritanshi, are you there? Can you just unmute and speak?
Yes, sir.
Very good. Moeen, are you there?
Yes, I am there.
Nityashri? Nityashri, are you there? Again, you have to unmute and speak. And we have Sandhya Kandel. Sandhya, we just called out your name. I was just saying Sandhya is absent. Right, guys, I still see people are joining, right? Again, make sure you're joining 5 minutes before the scheduled time. So again, Nityashri would be marked absent. Nityashri, can you at least type in the chat box to confirm your presence and to confirm that you're here and listening to me? Sara Ajbri, are you there?
Yes, sir, I am there.
Okay. Teerth? Okay, Teerth is there. Nityashri, again, please make sure that you are here with us because otherwise, obviously, it will automatically mark you as absent. Because obviously, as I said, I'm able to read out the ones who are here, the ones who are responding, it all gets captured. Satakshi, are you there? Satakshi left. Okay. Right. So, guys, this is what we're going to look at. We're going to look at the FR topics today, right? And obviously, my way of teaching is basically I'll give you examples and I'll explain what is there in the textbook. If anybody wants to make sure that you're sitting with a calculator and stuff, now is the time to do because sharp 5:40 without fail, I will start. So you want to sit with a calculator, you want to sit with your notes, your pen, whatever you want, make sure it's there with you. And all of you, unless you're speaking, keep yourself on mute because I don't want like background noises to disturb the class and the recording. It is 5:40 exact, as you can see on my screen, right? And that would finally allow us to commence the classes, right? And we're going to start off with IAS 1, right? But again, before I do explain what is IAS 1, I would just want to explain in brief what IAS is. And again, please excuse me, the ones who were there in the demo, I would be repeating a few things from the demo. So I need your patience just for the first class, after which, everything will be brand new, right? Alex, are you there? You are writing the FR paper, correct? Now tell me, when you're doing this paper, is it helpful if I give you a friend, who will help you in FR? This friend will basically completely help you in FR from starting till ending. He will tell you what to do. He will remind you the rules. He will tell you how to measure items on the financial statements. He will tell you how to recognize items on the financial statements. He will tell you everything A to Z. Basically, you have like a cheat code. You have a friend who will help you, right? How many of you want a friend like this? Raise your hands or type it in the chat box or unmute and speak. Quickly, Shivangi wants a friend like this. How many of you want a friend like this? Moeen wants a friend like this, right? This friend is IAS, right? IAS is basically like a friend for you in your FR paper, right? IAS is basically helping you in preparing the financial statements, in doing financial reporting, right? The name of this friend is International Accounting Standards. So a lot of people get very panicked when I say IAS, but this is just a friend who is going to help you in financial reporting. And for each, just like in your day-to-day life, for sharing your secrets, you have a friend. To ask doubts, you have a friend. To go out with, you have a friend. To share reels with on Instagram, you have a friend, right? So just like that, in FR also, for every aspect, you will have a certain friend. Maybe it is IAS 1, maybe it is IAS 16, maybe it is IAS 14. Just like for every aspect, you have a certain friend. Even over here, for every specific aspect, you have a certain IAS. So IAS is what? IAS is basically that friend who is going to help you, right? So IAS helps you. Again, guys, you are expected to write everything, okay? All the notes you're supposed to write, not only what I am writing, okay? It helps you. Everything I say, you're expected to write, but even what I write, you have to write. So basically, you have to write everything. IAS helps you recognize, measure, and present items in the financial statements. So it lays down the rules for preparing financial statements and helps you with what the rules are. With which introduction to IAS is over, which was also done in the demo, right? So IAS is International Accounting Standards that is going to help you in preparing the financial statements. I hope that is clear. Again, you're expected to write it down in your notes. Okay, so it is done, so I have put it in green. Green means done, and these are the relevant notes for it. So you can write it down, right? Again, I will not wait for more than 1 minute because obviously I have to finish the entire thing which is mentioned, right? But I can give you 1 minute. Now, let's move on to the next topic, which is presentation of financial statements, IAS 1. How many of you watch Netflix or you have like, Amazon Prime? How many of you, raise your hands? Raise your hands. How many of you watch Netflix? Any shows, any series? How many of you do it? I don't know how. 1, 2, 3, 4, 5 of them have raised their hands. What about others? Simran, again, Zoom user, please don't come off as Zoom user. There is somebody who is by the name Zoom user. Ensure that all of you use your names. Satakshi has raised her hands. Right? Now tell me, when you're watching a series, do you want all episodes or do you want some missing episodes also? Do you want all episodes or you want like first episode is there, second episode is not there, third episode is not there, then fourth episode is there? How many of you vote for all episodes to be there? Zoom user is saying I. Zoom user, what's your name? The one who just said I. I would hate to call you Zoom user. What's your name? The one who just said I in the chat box. I'm sure Zoom user is also clueless if I call you by Zoom user. The one who just said I, what's your name? Type it. But again, all of you are saying that you want all the episodes to be there, right? Same way, IS1 tells you what a complete set of financial statements should include. Just like your Netflix series is supposed to have the complete set of episodes, IAS1 outlines what a complete set of financial statements should include. Right? That is what IS1 says, right? For example, we must have the statement of financial position. That is one thing that must be included. It is a financial statement that must be there, also known as balance sheet. Now again, how you are naming the episode does not matter. Again, Zoom user, you are asking me this question for June exam, what kind of, see, you will get access to the complete subject for that one paper. I'm teaching you from chapter 1. This is not randomly I'm teaching from somewhere. So this is your first class. Imagine you have joined an institute, right? They will teach you from day 1. So all these questions, I mean, obviously we will help you with that in the exam kit, what is coming, what is not coming, we will solve. So this is the normal, this is not like I'll teach what I want randomly from somewhere, I will take the exam kit and we'll do everything. As of now, just focus on class, right? So we have what we must have in the set of financial statements. We need to have the statement of financial position. It is one very important episode which you don't want to miss, and IS1 does not want you to miss. Right? Then what? We have the statement of profit or loss. That also needs to be there in these financial statements. Statement of changes in equity. Now again, statement of profit or loss is what also known as income statement. So you can know again, IS1 is basically saying that you need to have, just like your, as I said, just like your Netflix series, it's supposed to have the complete set of episode. IS1 outlines what a complete set of financial statements must include. Are you understanding? So these are some examples which I'm giving you. Right? Again, what name you use is secondary. Right? Whether you're using balance sheet, some companies just say balance sheet. So that's fine. What name you're using, again, IS1 does not have a problem with that. Right? You are just trying to understand all the set of financial statements that must be included. Now, again, let me show it to you in the text. Now, again, my style and strategy is first I'll explain and then show you the text. So, IS1, presentation of financial statements, what does it talk about? It outlines or it states the complete set of financial statement includes what? Just like a complete series includes episode 1, episode 2, episode 3, episode 4, episode 5. Same way, IS1 outlines what are the set of financial statements that will be included in a complete set of financial statements. Right? I did give you these examples: statement of financial position, statement of profit or loss, statement of changes in equity, statement of cash flows. That is another example we can add. But again, what does IS1 say? That's it. It just says that it just outlines what are the financial statements, what a complete set of financial statements must include. And as I said, the name, the title used does not matter. Right? And that is what IS1 talks about. I will summarize in the next 1 minute. IS1, just like a series, has to have all the episodes. IS1 says that your financial statements, a complete set of financial statements, should have what all financial statements. It outlines it. And again, it is a friend for you who is coming and telling you, see, this is a friend for you. This guy is coming and helping you and saying that you need all these things for a complete set of financial statements. So again, it goes back and it says that this is your friend, IS1. He's telling you that you need to make sure that all this is there. With which, again, this part is done. IS1, presentation of financial statements, is done. Right? Again, we have mentioned that the entire class will be, we will teach everything. So we have mentioned in the group multiple times that this is the entire subject. So anybody who wants to watch just practice questions, please join when we inform you that we will have practice questions practicing in this specific class. Right? All these things we have explained. If you have doubts about those things, it is best that you reach out in the hotline number, not in the class. In the class, I will be teaching anything related to subject, anything related to what I'm doing, you can ask. But everybody, I'm sure, is aware that I will be teaching you everything. This is not something new or a surprise. So please make sure that you're aware of what this is. All of you clear on what is presentation of financial statements, IS1? Type it in the chat box, please. Quickly, fast. Now, we're going to look at exceptional items. What are exceptional items? Well, exceptional items is what? Exceptional items, it's like every day, okay, I'll just share a story with you, right? A real story. I teach on a daily basis, right? I've been teaching from almost, as I said, a decade now, and I've been teaching from every day. I've been teaching without fail, even Saturday and Sunday. I teach on a daily basis. So my job is what? Come to class, make the lesson plan, deliver, basically teach, take feedback, and support. Right? This is how every day looks like to me. But one day, you know what happened? One day, a student came to my office. Okay, he came with his parents. Right? And he came with a gift. He gifted me something. And he and his parents thanked me. And the boy said that because of my help, because of my teaching, he cleared all his exams in the first attempt. And also is doing very well in his career. So that's why they had come to meet me. They had come to meet me and thank me and gift me and all that. So now this thing, what is in the color red is something that happens every day. It's part of the routine. But what is in blue, it does not happen every single day. It is something that it doesn't happen every day. It doesn't happen regularly. It's something that is exceptional. Right? This is not part of my daily routine. What is in blue is not part of my daily routine. Right? This is an item. Now, when I go and write in my diary that today, I was teaching, I taught, I took class. This is a regular item. Today, I gave homework. This is a regular item. Today, I corrected papers. Again, this is a regular item. But today, a student came with his parents to thank and gave a gift and really, showed his appreciation. This is not something which happens regularly. This is something which is an exceptional thing that has happened today. And this is an exceptional item. So with this example, I'm sure you have understood what an exceptional item is. So exceptional item is in blue and whatever is the regular thing is in red. So with this example, I'm sure you have understood what is an exceptional item. An exceptional item is basically some item in the financial statement that is not part of the daily transactions. This isn't part of daily transactions. It's not every day-to-day thing. It's not something that happens. Right? It is something rare but significant. I mean, this boy coming and thanking me, it is a significant thing which I will remember. Right? So it is something that is not part of your daily transactions, but significant enough. Right? Like this is significant. That's why I'm mentioning this to you. And because it's significant enough, this item must be mentioned, like how I'm mentioning this to you. Right? So an exceptional item is an item in the financial statement that isn't part of the day-to-day transaction. It's not a daily sale. It's not the daily purchases. It's not the daily expenses. It's 6 o'clock. It is an event that doesn't happen on a daily basis, not a daily day-to-day transaction, but it is significant enough. And that is why we are mentioning it. I'm mentioning it in class. You will mention it in the financial statements. And such an item is an exceptional item. Right? For example, again, let's look at it over here. Right? For example, write down of inventory to net realized. Forget write down of inventory also. I'll give you one example which you will be able to understand. Impairment of your property, plant, equipment, something that you have, something that you own, an asset of yours doesn't get impaired every day. Asset impairment is not something that happens every day. Every day your mobile is damaged every day. Every day you wake up, every day it's damaged. Every day you go and repair it. Does that happen? No. So this is something which is an exceptional item, but it is significant and therefore must be mentioned. Right? They are significant and must be mentioned. They will be included in the financial statements. You will make a disclosure. Just follow what I am highlighting. Right? One example, for now, just take one example. One example is impairment of property. This is what an exceptional item is. Again, you have it over here. Example is asset impairment. Right? I will give you 1 minute to review it and see if there's a problem and write down if there's something you want to write down. But again, I'm not going to, I've written what I could, but I'm not going to sit and dictate anything. Okay, it's essential that you are taking down notes. Right? So again, go back to the index. So exceptional item is what? It is done. So I've marked it in green. Then, although you need to be knowing this, especially if you're somebody who's done FA, I don't know how many of you did FA, but these financial statements, you need to know what it is. But even if you don't know, again, I will help you. But I will, in a way, you will remember it and we will finish it off also fast. First one is the statement of financial position. Remember, this is for now at your level. I don't know, I mean, all of you are from different backgrounds, but this is a piece of paper. That's it. I mean, it is a piece of paper that has some information about your company, that answers three questions mainly, three main questions, or sorry, that talks about three main things, that gives you answers to three main questions. A simple piece of paper that gives you answers to three main questions. The three main questions are what? This in black. What are the three main questions? The three main questions, question number one is, it answers what assets do you have? So in the statement of financial position, your assets will be mentioned. What assets do you have? You know, both the non-current assets and the current assets. So it's basically mentioning what assets you have. And I believe that it is there in the index. We're going to look at assets. Right? So it's basically talking about what assets do you have, the current and non-current assets. Right? Then the second question it answers is, what liabilities do you have? Both non-current and current liabilities. And the third question it answers is, what is the equity? Is the equity. These three questions, these three things will be mentioned in the statement of financial position. I can prove it to you by showing you the textbook. But again, it's a simple piece of paper that gives you answers to three main questions. What assets do you have? What liabilities do you have? And what is the equity that we have? Again, let's prove it. Let's look at the textbook. Look at the statement of financial position. It is a piece of paper that is talking about the assets. We've mentioned all the assets that we have. Then it's talking about what? It talks about the equity that you have. It talks about all the four things that need to be mentioned here, which I'll come to shortly. Then it talks about what are the liabilities that you have. It talks about both the current and the non-current liabilities. That is it. And that is what is the statement of financial position. End of story. So it is a simple piece of paper that gives you answers to only three questions. It will talk about the assets that you have. Okay, let me put it in the right order. Then it will have what is the equity. Under equity, there are a few headings that will show the share capital, the share premium, the revaluation surplus, and the retained earnings. Right? So what is the assets you have? What is the equity you have? And what is the liabilities you have? Right? So what are the liabilities? Non-current and current. Now again, for those of you who don't know, I feel that I should just brief you on that. Non-current liabilities and current liabilities. So these three things, if you're answering no, you will answer them in the statement of financial position. And that is it. That is what is the statement of financial position, which is part of the first chapter. So basically today, we're completing the first chapter and moving to the second chapter of the textbook. Statement of financial position. But remember, a few things I would need to tell you. Okay. And the question is very simple. The question is, when you make coffee for yourself, you can make it as you like, correct? Like normally in my tea, there's a lot of sugar. I mean, I put too much sugar, right? Which I'm trying to avoid now, but I put more sugar. So I put sugar as per my wish. But when you make coffee for somebody else, maybe an 80-year-old grandmother, can I put 5 spoons of sugar in her coffee? What do you feel? Yes or no? Like if I put 5 spoons of sugar in my coffee, can I also put 5 spoons of sugar in her coffee, in her tea? Teeth says no. Bharat says no. So, Kshitij, please, no. Don't do that. Kshitij. I don't know if I'm pronouncing her name right, but you are giving it to her. You are giving it to the 80-year-old grandma. I don't know, she has sugar. So, you will ask her, you will prepare it according to her. According to her. Okay, if your grandpa has a lot of sugar, then you are preparing it according to him. Maybe Sarah does not want sugar. Right? Basically, what I'm trying to say is when you make coffee for somebody, you will prepare it according to them. Same way, financial statements, a lot of people are looking at. Your government is looking at it. Your shareholders are looking at it. The managers, employees, customers, public, so many people are looking at it. And therefore, when you prepare financial statements, you cannot prepare it in any order you want. There is an order that you will follow. Because you're doing it for so many other people. It's not just for you. It's not only for internal use. It is for external use. A lot of people will be using the financial statements. A lot of people will be looking at your financial statements, Kshitij. Right? So you need to follow a format. Right? In that format, again, what are the ingredients? We will talk about what are the assets you have. Right? So the first thing that will be mentioned in the statement of financial position is the non-current assets. Now, with that, I will explain to you what are non-current assets and current assets. Again, we're going right from the basics and we're making sure that your understanding for FR is very, very strong. Right? So, what is an asset, first of all? An asset is anything you own. For example, your property is an asset. Something you own, it is a resource. An asset is an economic resource. That you own or control as a result of past transactions. An asset is something that makes you happy, right? For example, cash. Cash is a resource. You can use it for your benefit. So cash is an asset. So anything which is an economic resource that you own or control is an asset. Can we name some assets, guys? There are 19 of you present live. Can you name some assets, something that you own or control? Anybody? Just type it. Building. Building is an asset. Machinery. Laptop. Somebody said, Bharat said stock. Basically, the inventory that you're selling. Equipment. What about cash? Cash, is it something that you own? Is it a resource? Is it something that you will use? Cash, is it an asset? Cash is an asset. What about money that you are yet to receive? That you should receive from people. Suppose you should receive from me 10 lakhs. Suppose I should give this to you in 1 week. Is this something? Yes. This is money that you are going to receive. Right? So a receivable is also an asset. So all of these are assets. Right? Now, in this, some assets in this, some assets in this, you would keep for a long period of time. For example, when you buy building, suppose you're going and buying building today. Will you buy that building to sell it after 1 week? Oh, I'm buying the building, I will sell it after 1 week. I will buy building to sell it in 10 days. Do you buy building to sell it in 1 day? No, building is an asset that you intend to keep for a long period of time. Machinery also, when you buy machines, you will not say, okay, in 4 hours I'll sell this. No, this is an asset which you intend, maybe 2 years, 3 years, 4 years, 5 years. It's an asset that you intend to keep for a long time. My laptop, I have it from 7 years now, and it's as good as new. Equipment, machinery equipment again, same thing. Land, say, okay, my grandfather's land is there. It is there from my grandfather's time. Right? Land I'll not buy, okay, I'll sell it off in 1 week. Right? Land is also an asset which you will keep for a long time. Land. Maybe you will give it to your children. Those assets which you intend to keep for more than a year, what are they called? Anybody? Any guesses? Those assets which you intend to keep for more than a year, what are they called? Yes, teeth. That's right. What are they called? Yes, non-current assets. These are those assets which you intend to keep for more than a year. Let me just intend to keep for more than a year. Then what about your other assets like inventory? For example, let me just show you my screen. Suppose we sell clothes. Okay. Suppose I'm selling these clothes. Just imagine this is my shop and I'm selling these clothes. Do you think I want to sell it fast and get money, or I want to keep this for my grandchildren? When they are born, I will give these clothes to them. I want to sell it fast, sell it. Within 1 year, I want to sell it. As soon as possible, I want to sell it. Right? So this is an asset which I want to keep for less than 1 year. What about, again, look at my wallet. I'm just showing you my wallet, okay? This is my wallet. Where is my wallet? I'll take a photo with a lot of cash. Where is my wallet? This is my wallet. Right? Do you think this cash after, again, imagine this cash, do you think it will be there? I'll use it after 10 years? No, I want to use it. Again, this cash that I have, Satakshi, imagine the cash, the note that you have in your bag, Satakshi. You have some cash. You will use it now. It's not something that you will sit and be like, okay, you will use it for your life, for your expenses. Yes. So cash is an asset. I'll not give this to my grandchildren. I'll not be sitting. Maybe now this note will be there, but if you meet me tomorrow, maybe I'll have other notes. Maybe I'll have 200 notes. Right? So cash is an asset which you intend to keep for less than 1 year. Right? So cash you intend to keep for less than 1 year. Inventory or stock, the clothes example that I gave, you intend to keep for less than 1 year. Such assets which you intend to keep for less than 1 year. 1 year are current assets. So we've got current assets, we've understood what are non-current assets, and we've looked at examples. Receivables also. Suppose you have to receive money from me, for example, okay? Suppose you have to receive money from me. Do you want to receive it as soon as possible, or you want it after the, is it okay if I give it to your children after 40 years? Do you want it now? Do you want it fast? If I have to give you money? Yes, Satakshi, as soon as possible. Therefore, receivable is an asset which you intend to keep for less than 1 week. You want to collect it fast. So I've just here in brief explained what are non-current assets and what are current assets with the example. Why have I taken the effort? Because obviously these are the ingredients that go into the statement of financial position. Right? So we've looked at what? We've looked at what an asset is, and we've looked at what is a non-current asset and a current asset in this page, basically. Again, I can give you 1 minute to make a note. Let me just check. The break is at 6:55. Okay, so we've looked at what is an asset. What is an asset? Both non-current and current. right? So when you prepare your financial statement, guys, as I mentioned and as I said, Kshitij, you will prepare it in a specific format. You will follow, you will not do it as you want, right? There is a certain format to follow. So in the statement of financial position, the first thing you will mention is the non-current assets. Why? Because I mentioned, look at the statement of financial position. It gives you answers to three main questions. First is what assets do you have? Both non-current and current. And we are mentioning that in the statement of financial position. Non-current asset like PPE, property, plant, equipment. There are other examples which we will look at, but here I'm just trying to fill in the blanks and tell you how the format is. After non-current assets, in the statement of financial position, we will mention the current assets. Examples of current assets are in front of you. Inventory, cash, receivable. And that is exactly what is there in the textbook also. See this? Side by side, look at the left-hand side. There is non-current assets. Just follow my cursor. There's non-current assets. That's what I mentioned here also. Non-current assets. We take it on a fresh page. Non-current assets. Then we have current assets. See here on the right-hand side, current assets. Then on, again, remember, this is the statement of financial position. Then what do you have? Go back to my answer on statement of financial position. I said it's a piece of paper that gives you answers to three main questions. First question we have answered. What assets do you have? Both. We've talked about the non-current assets and current assets. Second question is, what is the equity? This is basically what belongs to the owners. Okay. So the second question is, what is the equity that you have? What did the owner invest? Right? What belongs to the owners? This is basically the share capital when they invest the money. Okay, again, we'll look at this in more detail. Share capital, share premium. There's something known as revaluation surplus. And there's something known as retained earnings. Teerth, are you trying to say something? Your hand is up. Right? So these things would be there in the statement of financial position. Okay, I will explain each of these things in the next chapter, or probably in fact even in the next section. But this is what belongs to the owners. And again, if you see the textbook, this is there. Finally, in the statement of financial position, the other thing is the non-current and current liabilities. But again, before I mention that, I'll just in brief explain what is a non-current liability. Current liability. What was an asset? An asset was a resource, something that you own. A liability is something that you owe, something that you have to give. This is an obligation, economic obligation that you owe, that you have to give. Right? Again, I will remove asset from the screen now because we've done it. And I will remove this from the screen because I've explained it. This is an economic obligation that you owe, that you have to give. Right? For example, when you take a bank loan, should you give it back or no need to give? No need to repay? What do you people feel? Should you give it back or no? When you take a loan? Repay, right? You have to pay it back. So a bank loan is a liability. It's something that you owe back to the bank. What about There are these small petty shops, small shops, maybe grocery shops. If you go and buy from there, maybe one toothbrush, if you go and buy, and you don't have cash, so that guy tells you, okay, you take the money, you pay me later, 15 rupees something. Should you go back and pay him or no need to pay? Pay him back. So this is a money that you have to pay. It's a payable, right? So these are examples of liabilities, right? Abdullah bin Miraj. Again, I'm just seeing you now. Guys, just make sure that you are joining on time if you're doing it live, because otherwise you will be lost with what I'm doing. Right? So a bank loan and payable, these are obligations you have to pay back. These are liabilities. But that shop guy, 15 rupees, he's a payable, right? Will you pay him after 5 years? Or you pay him as soon as possible? ASAP, as soon as possible. I'm only seeing 2-3 people responding fast. Others, please respond. I'm waiting. Very good, Vaisha. Yes. So this is a payable is an example of a liability that needs to be paid within this year. And that type of liability, what is it called? Any guesses? A liability that needs to be settled within 1 year. What type of a liability is it? We just said, yes, Kshitij. That's right. Current liability. So a current liability is a liability that needs to be paid within 1 year. For example, a payable. What about a bank loan? When you take a bank loan, should you pay back in 1 week? If you borrow from the bank 1 crore, should you pay back? No. Generally, bank loan will be 3 years, 5 years, 7 years. So that liability that needs to be paid in more than 1 year, payable in very good guys, more than 1 year, is a non-current liability. Example is a bank loan. So guys, we've looked at on this page, what is a liability, what is a non-current liability, and what is a current liability. Again, I'll give you just 1 minute to review this, see if there's a problem, and then I will move to closing the statement of financial position or balance sheet. Yes, that. So again, if you go back to my index, I've done presentation of financial statements, exceptional items, statement of financial position, what is an asset, what is a liability, along with non-current and current, with the examples we have seen. But again, what is a statement of financial position? Only one sentence answer. This is a piece of paper that gives you answers to 3 questions. What assets do you have? What equity do you have? What liability do you have? This is what is the statement of financial position. Here, I'm just each component, I'm explaining it to you in detail. Just assuming that you don't have the background. I don't know, some of you might have, but I'm just making sure that nobody is left behind. So under non-current liabilities, we will mention the non-current liability like the bank loan. And under current liability, we will mention the current liability like the payable. And you see, this is the statement of financial position. End of story. So as I said, this is a simple piece of paper that is answering 3 questions. What assets do you have? Both non-current and current. What equity do we have? And what liabilities do we have? Both non-current and current. So it's a simple piece of paper that is only answering, giving you information about 3 things. And this is the format. That is all. I hope it was crispy and clear. right? And with which the statement of financial position is completely done. Okay? I hope that is easy. I hope that was clear. Let's move on. All right. Let's move on to the statement of changes in equity. What does this say? What does this have? Remember, equity is tracking four things. The statement of changes in equity is answering four things, just four. So, statement of changes in equity is again a financial statement. It is a piece of paper. Again, this isn't the definition, guys. I'm telling you this for you to know and be comfortable with, right? But it is a piece of paper that is answering four questions. Four. Just four. Again, remember, equity is what belongs to the owners. And under equity, we have what? We have the share capital. This is the money the owners invested, the owners put in. Statement of changes in equity looks at how. One second. So this is the money the owners put in, right? Then comes share premium, which is close related, but again, I will give you those details shortly, right? It is also part of equity. Then comes revaluation surplus. Again, what does this mean? Sometimes some assets of the company, for example, building. I have a land. Okay, this is my land. When I buy it, this is the plot of land that I have. And this land is, when I buy it, it is 10 lakhs. After 8 months, a very big mall was constructed. Mall was constructed in front of my land, because of which the value of the land was, the value changed. There was a new value, revalue. The value increased from 10 lakhs, it became 18 lakhs. So you see, there is a surplus of 8 lakhs. 8 lakhs extra value I have now. And again, it belongs to the owners. That surplus that you get when you revalue an asset, or when an asset's value increases, that belongs to the owner and must be reflected here under revaluation surplus. Right? So that is what revaluation surplus is talking about. Right? This is basically when company assets increase in value, it belongs to increase in value, it belongs to the owners, and therefore is therefore found under equity, under statement of changes in equity. In statement of changes in equity. That is the revaluation surplus. And then comes retained earnings. Again, guys, suppose I have a business and I have a profit of 5 lakhs. This profit should go to whom? To whom should this profit go? Owner, correct? Maybe from this 5 lakhs profit, yes, I agree, it has to go to the owner. So say from 5 lakhs, 3 lakhs I have given to owner. You people are the owner, so I have given 3 lakhs to you. So how much have I retained with me? 2 lakh. Why have I retained with me? Retained means kept with me. Why have I kept it with me? To invest again, to reinvest, to put in business, to grow the business. So retained earnings is nothing but the earning of the company, the earning of the owner, which the company has retained. It has kept it with itself for reinvestment purpose. So again, as I said, it belongs to, yes, Sara Ajbri. It belongs to the owner, and that is why it falls under statement of changes in equity. This is basically what needs to be given to the owner. Profit that is retained or kept by the company without being given to the owner. Why? Because we want to invest. So this again belongs to who? Actually, we need to give it to the owner. Therefore, it will fall under equity. So basically, statement of changes in equity is a piece of paper that is answering 4 questions. What share capital do you have? What is the share premium? What is the revaluation surplus? What are the retained earnings? 4 things. 4 things, that's it. Right? And that is why the statement of changes in equity looks like this. Share capital. What was it in the beginning in 2007? Just follow my cursor. And what was it in 2008? And we looked at share premium. What was it in 2007? What was it in 2008? Then we look at share revaluation surplus. What was it in 2007? What is the balance in 2008? Finally, retained earnings. What was it in 2007? What is it in 2008? And again, as I said, this is a financial statement. There are so many people that are looking at it. So you cannot do it as you want. You will follow this format. So with that, we've looked at statement of changes in equity. Let me go back to the index. So what have we looked at so far? Again, if you people don't mind, I will just quickly summarize on what I've looked at so far. IS1 is basically like, it's saying, it's basically a friend that is saying that what are the things that need to be included in a complete set of financial statements. Just like in a Netflix series, all the episodes need to be uploaded. Same way, all the financial statements need to be there. IS1 outlines that. Exceptional items, these are those items, these are those things that fall in the financial statements that don't happen on a day-to-day basis. I mentioned statement of financial position is a piece of paper that is only answering 3 questions. The 3 questions are: what assets do you have? What non-current assets do you have? Current and non-current both. Second question is: what is the equity? And third question is: what are the liabilities? Then I went further and explained what is an asset. Asset is basically a resource that you own or control. Again, there are 2 types of asset: non-current and current. What is a liability? It is an obligation that you owe to somebody. Again, there are 2 types: non-current and current. Then we looked at statement of changes in equity. This is one of the financial statements that answers 4 questions. What are the 4 questions? The 4 questions are: what is the share capital? What is the share premium? Okay. Revaluation surplus and retained earnings. That's it. Then we talked about, we didn't talk about the statement of profit or loss. Right? So we will talk about the statement of profit or loss. Now, this is simply a piece of paper that answers one question. Statement of profit or loss is a piece of paper that answers one question. What do you think the question is? What do you think the question it is? What is the question that it is answering? The name itself is suggesting. It answers what is the profit or loss. What is the profit or loss? So again, it will say how much do you earn, what was the revenue from the income, what was the expenses, and what is the profit. That's all. It will say what was the revenue. Okay, suppose the revenue was 10. It will say what was the cost or the expenses. Suppose it was 2. So what is the profit? 8. And then it will deduct some other profits to get the final net profit. This is the statement of profit or loss. Very simple. Again, this is all part of the first chapter, which is a very, very basic and a simple chapter. Why do I call it a basic and a simple chapter? Is honestly, the chapter is over. So out of 22, 23, 24 chapters in your textbook, we've completed the first chapter in the first class. We've completed it in the first half of the first class. Right? Now, this first chapter is only talking about these things, basics. Right? The second chapter is what talks about, the what is financial reporting and so on. In which already introduction to IAS I've done. This was a friendly introduction where I said that it is basically a friend that is helping you in preparing financial statements, in doing financial reporting. So throughout this paper, this friend will be there to help you. Okay. Right. So far, again, I don't normally do this, but because I've finished the first chapter, so far all clear, just type clear, or if you have a problem, just mention which point, which topic. 1, 2, 3, 4, 5, 6, 7, 9. Either you put clear or you number it. If you have a problem in profit or loss, you put number 7. So everybody's clear. So obviously, okay, Kshitij has talked about number 6. So Kshitij, can you tell me how can I help you in number 6? Quickly. You missed one part. Missed one part as in you got disconnected. Did you get disconnected or you didn't understand? These are two different things. If you didn't understand, I'll repeat. Which part is it? Let me know. If you missed it because you got disconnected, then you can just go to that part and rewatch it. If you miss it, means you got disconnected. Okay, then in that case, just make sure you watch it. Now, we're going to look at Introduction to Financial Reporting. And I know that this is going to be a little disappointing to a lot of you because the ones who attended the demo have already covered these things. But just kind of take it as like the first class, a little bit of a, problem. But I will, for those who are attending this for the first time, have to talk about and have to mention these things. Right? And because otherwise, even if I tell you, oh, just watch the recording, that continuity will not be there. So I'll just brief you on what is, just the introduction to financial reporting. Right? And I'll give the same, the same explanation, the same examples which I gave in the demo, which is also on YouTube, in fact. But number one, as a student in school or college, you used to get a report card. This report card used tell you and your parents, and sometimes, unfortunately, even relatives, used to tell you and your parents and all other stakeholders about your marks, about your performance. Was this card necessary? Was preparing this card important to know how are you performing? Yes or no? Yes. So from, now we're no longer in school, right? So the adult version in the company is just like it was necessary for you to know how you are performing. So your teacher used to prepare a report. Same way over here, you prepare a report on the company's performance. This is necessary for the various stakeholders to know how is the company performing, right? So companies prepare financial statements to report their performance. Just like how teachers prepare report card to show you your school performance, companies prepare financial statements. Companies prepare financial statements to report their performance, financial performance. Okay, even non-financial, you will have that in a certain thing. But okay, for now, I'll just talk about financial performance. Right? And that is all. That is what you are going to learn in FR. Basically, you will learn on how to prepare these financial statements line by line, step by step. For example, in the previous chapter, I told you what is the statement of financial position. Right? I told you non-current assets are there, current assets are there, equity is there, non-current liability is there, current liability is there. All these things I told you. Now in this paper, basically, line by line, one by one, with the help of our friend, remember IAS, we will learn how to prepare these financial statements step by step, line by line. And that is all FR is about. One by one, we're preparing financial statements, line by line, item by item, step by step. That is what is the introduction to financial reporting, right? With which it is also done. Right? Now we will move on further. And again, I will be giving the same example which I used in the demo. But what is, let me just, yeah. Imagine I tell you that, imagine, this was in the demo, I have to keep repeating, but imagine I tell you that I will give you a property. How many of you are happy? Raise your hands, type it in the chat box. I'll gift you like a mansion somewhere in your city, the prime location. Yes, everybody is happy. Why? Because the minute I tell you property, what does it mean? Property is something that is making you happy. Why? Because it is something that gives you future benefits, future economic benefits. Right? So the second IAS that we're going to learn here is IAS 16. IAS 16 teaches you step by step how to treat property, when will you say something is property, how to measure it, and so on. So IAS 16 is a friend that guides you on what is property, When will you say something is property? When will you not say something is property? How will you measure property? What number will you put? IAS 16 is that friend who will help you with property. It's a friend, so that's why it's smiling. Right? Maybe there is one specific friend will help you in the exam. I mean, unfortunately, shouldn't be happening, but one friend will help you in copying. Again, should not be happening, but he helps you in copy. So same way, this friend will help you with PPE. IAS 16, you have to remember this. IAS 16 is PPE, right? Nityashri, are you there? Nityashri, yes. Nityashri, are you there? Type it in the chat box. Now, how do you recognize something as property? When will you and how will you say something is property? Again, as I said, when I was saying that I'll gift you a property, all of you were happy. All of you said, yes, 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 I want a property. Why? Is because property is something that will give you future economic benefits. Maybe you will rent it out, sell it and get money, or use it to make money. But property is something that is getting you future economic benefits. So according to IAS 16, when will you recognize something as property? When it gives you future economic benefits. And you people told me this. I didn't tell you this. You guys told me that, oh, property we want. Why? Because it will give you future returns, future money. Nityashri, are you there? You unmuted and then you're back on mute. Yes. So property, you people told me, you said you want it. Why? Because you said you're getting future economic benefits. So the first thing IAS 16 tells you about PPE is PPE is something that gets you future economic benefit. That is the first point. As per IAS 16, IAS 16 says, how do you recognize property? Recognition of property, it is something that gets you future benefit. Point number one. Again, what I'm putting into is the main. It gets you future benefit. What is the second recognition of property? I gave the same example in the demo, but I would, it's just convenient to give the same example again, and it'll be like a quicker revision for others. Air can get you benefit. Right? Maybe you will use air to produce something. Maybe you will use air to produce a product. But will air be property? Will air be counted as property? I gave this example to Nityashri in a class, and again in the demo also I gave this example. Will air be counted as property? What do you people say, yes or no? If it's getting you just you are breathing it and getting benefit, or you're using it to fill up your tires and something, so you're getting benefit. So will air be counted as property? No. The reason is you don't know what is the cost. So in order to recognize something as property, yes, it needs to get you future economic benefit. But the second thing is what? You need to know the cost. Without that, something that is just like air, you can't say it is PPE. So the second point to recognize PPE is you need to be able to measure the cost of it. The cost should be measured reliably. Measured reliably. That's it. Now it's 6:55. Again, we follow our rules very strictly. 6:55 is the break. And 7:05, exactly 10 minutes, we will come back. Sharp 7:05, I will start. But please don't leave the meeting, just stay in the meeting. You can just move around, have some snacks, whatever it is. 7:05, we will continue sharp. Yes, guys. So welcome back. It's 7:05 p.m. And we just looked at, are you all back? Just type it in the chat box. Say yes, back, whatever. Your. So again, remember, we will start dot on time. That allows us, gives us the liberty to also end on time. So we've just looked at recognition of PPE. I said there are two things to recognize something as PPE. First is that it should be something that gives you future benefit. And number two was what? Number two, the cost should be measured reliably. And that is what the textbook says as well. Right? I did mention this. But if you have a look, and we'll do the sums as well. If you have a look here, it talks about recognition. And it says property, plant, equipment. How do you recognize? It is probable that you get benefits, future economic benefits, and the cost should be measured reliably. This is the recognition for PPE. Now, what we're going to look at is measurement. Measurement of PPE. How, again, you know when to put something or count something as PPE, right? But what you need to know better is you also need to know how or what number will you put to it. What do I mean by that? Is obviously in the financial statements, when you put something as property, land, equipment, you will need to give it a value, right? Some value, maybe 100, 200, maybe 5,000, maybe 1 lakh, maybe 1 crore, maybe 10 crore, some value, some number needs to be put here, right? And measurement helps you in that. IAS 16, again, it's still the same thread. Until we finish PPE, it is IAS 16 who is going to help us. IAS 16 will also help you in the measurement. Are we understanding? And that's what we're going to basically look at over here. Right? So IAS 16 helps in the recognition and also in the measurement of PPE. So let me put it this way. If, again, I'm using the same example as was used in the demo, but if, suppose, you buy an AC for 50,000, you can easily say this AC is worth 50,000, so I'll put 50,000 over here. True or false? Yes or no? Yes or no? Say yes or no. Just respond in the chat box. You buy it for, you paid 50,000 for it. You bought the AC for 50,000. So can we say that this AC of ours is worth 50,000? Is it safe to say? Yes. Right. So the cost of the item, the cost of the item would be included in the measurement. Cost of purchasing it and owning it and bringing it under working condition will be included. For example, the cost of purchase is 50,000. You will say, yes, I have an asset worth 50,000. Suppose in order to get the AC to your house, you need to pay a delivery fee. Without paying that delivery fee, obviously you cannot bring it under working condition because it will be sitting in the AC shop. So delivery fee, say it is 5,000. That is important to own the asset. That is important to bring the asset to working condition. Therefore, you will include it as the value of the asset, and you will say, okay, this asset was 50,000, but for delivery I paid extra 5,000. So I spent 55,000 for this AC. What about installation? Without installing the AC, can you use it? Can you bring it in the working condition? Without installing the AC, can you use it? No. So suppose you paid installation, you will also include that in the value of the asset. Only Satakshi has said no. Others, can we use the AC without installing it? We just kept it outside. It's, no. So all the expenses, all the money spent in purchasing the asset, in owning the asset, or in bringing it under your ownership, maybe some legal fees, and bringing it under working condition needs to be capitalized here, needs to be included here in the value of the asset. Right? So again, let me break this into points so that this is easy for you. Cost of purchasing, cost of owning, maybe you have to pay something like legal fees, paper fees. Yes, Steve, that's right. Legal fees, etc. Without paying the legal fees, you cannot own it. And bringing it under working condition. For example, installation. And what else? Borrowing charges. For example, to buy the AC, you took a loan. And obviously, the loan will have interest. Borrowing charge. Without the loan, if you don't have money, can you own the AC? You don't have money. Without the loan, without paying interest, can you own the AC? Others, what do you feel? Suppose you have no money, you have to take a bank loan. There will be interest. Without that, can you own it? No. Therefore, borrowing charges will also be included in the measurement of the PPE. So first is the cost of purchase, second is the cost of owning, maybe any legal fees that you have to pay, maybe any stamp duty that you have to pay. Then what? Cost of installation and cost of borrowing charges. And AC, once you install it, can you leave it like that forever? It's your own AC. After installing, you also have to uninstall it, dismantle it later. It is your responsibility. Without that, you will not be able to use it in the next place, for example. At least it is your responsibility. Right? So dismantling charges or uninstalling charges also will be capitalized. So these are the costs that will be capitalized, that will be measured. Any problems here, guys? What to capitalize? Now, whenever we say what to capitalize, we also have to say what not to capitalize. What not to capitalize. For example, once you buy the AC, every month there will be electricity bill. Correct? Suppose there was an electricity bill of 500 rupees. Will you go back and say, oh, now my AC is worth extra 500 rupees? Will you say that? If you pay electricity bill of 500, will you say, oh yes, my AC is extra 500 rupees worth? Yes or no? Yes, the electricity bill we will not consider. This is an expense of running the asset, not of owning it or bringing it under working condition. What to capitalize? You will capitalize anything spent on owning and bringing it to working condition. But there are certain expenses paid, incurred to just run it, just run the asset or maintain it will not be capitalized. Are you understanding? They are just for maintaining it or just running it. For example, electricity bill, for example, repair, maintenance, electricity charges. Now, in case of AC, it will be electricity. In case of car, one expense for running the car is fuel. It will not be capitalized. It is just expense for running the car. It is not an expense for owning it or bringing it to working condition. What else will not be capitalized? Maybe maintenance and repair. Again, it is an expense of just, yes, Satash. Just to maintain it, just to repair it, whatever it is, you will not include it. Right? What else? Training staff to use the asset. For example, you buy an AC for 50,000 and then 1,000 rupees you have to pay to train the staff to use it. Will you say my asset is worth 1,000? No, it's just an expense to maintain it by the staff. So that also will not be included. And abnormal costs will not be included. So these are the expenses, what to capitalize, what not to capitalize has been clearly outlined by our dearest friend, IAS 16. So your life is easy now. In PPE, what will you put, what will you not put? If you just make a note of this, that's it. End of story. You are happy, good to go. These are the things you will capitalize. These are the things you will not capitalize. I'll give you 1 minute to make a note. So we've looked at PPE measurement also. Next, I'll tell you why abnormal costs and general overheads are not capitalized. Here, see, I just told you abnormal cost will not be capitalized. Abnormal cost and general overheads will not be capitalized. Why is what I'll tell you now. Jitendra, you're right when you say that it's not included, but Satakshi will explain what is an cost, right? Abnormal cost is basically a cost that isn't expected because of some mistake you had to, for example, you buy an AC, but the delivery guy drops the AC. So you have to pay 2,000 extra for repairing it again. Yes, that's right. So were you expecting, who asked me this question? Satakshi, were you sitting and expecting, oh, this guy will come, bring the AC, he will drop it, so I have to pay 2,000. Did you expect it? No, that is not a normal expense. It was not an expected expense. Therefore, that is an abnormal cost. Is this clear to all? Abnormal cost is that cost which isn't expected. Abnormal. Abnormal cost is that cost which isn't expected. It is an unexpected cost that we incur maybe because of a mistake or a fault, which is the same thing actually. So, abnormal cost, this is not an expected cost. If somebody drops now, maybe second time also he'll come and drop the AC again. So every time he drops an AC or every time there is an abnormal expense, will you capitalize and say, oh, my AC is now worth 5 crores? Will you say that, Satakshi? Maybe you spent 5 crores. He brought it, dropped it, brought it, dropped it, brought it, dropped it, and now you have to pay 5 crores. I mean, this is an extreme example. But this is your fault. You cannot capitalize it. Are you understanding? Is everybody clear why abnormal cost will not be included? Yes or no? Satakshi is clear. What about others? Yes. And what about general expenses? For example, after getting the AC, you get an electricity bill of 5,000. This electricity bill, is it only for the AC? This bill, is it only for the AC? No, it's for everything. It's for the light, it's for the fan, it's for the water, it's for everything. So it's not fair to capitalize it in the AC. Therefore, general overheads will not be included, with which IAS 16 has clearly outlined to you what is included and what is not included. Now, believe it or not, if you know this, you will be able to do a sum in the text. Let's have a look at this, make a note of this. I'll give you 1 minute. Believe it or not, if this is okay, you are ready to do a sum from the textbook. I'll give you 1 minute to just go through this. Yes, guys, is this clear to all? Everybody is clear with this? Yes or no? Clear? Very good. Now, what are we going to do is, again, we're going to look at test your understanding 1. This is, we're on chapter 2. Chapter 1 is over. Chapter 2, sorry. Test your understanding 1. Okay, so let's do it understanding this, keeping this in mind. Okay, so we'll keep it side by side. So IAS 16 is there as a friend when we are solving this question. Okay, so look at this question. Just zoom out a bit. So your friend is there, standing, helping you. What will you capitalize? What will you not capitalize? Right? So let's have a look at this. Let's have a look at this question, guys. The first thing is purchase price of land. Do you think we will include or not? Purchase price. When you buy a land, will you include it or no? Will you capitalize it or no? Yes or no? Quickly. Very good, Sarah. Let's see who gives the answers first. So first one was given by Sarah. That's absolutely right. 250 will be included. Stamp duty. Stamp duty, again, it's like, like legal money. Yes, it will be included. So stamp duty will be included. Legal fees, will we include or no? Very good, absolutely right. Legal fees will be included. Site preparation and clearance. Remember, without clearing the site, can you construct the building? No. So site preparation and clearance, yes or no? Yes, it will be included. Material alone, have a look at this note. 100,000 was spent on material, but what does it say? Material costs were greater than anticipated. On investigation, it was found that material costing 10 million had been spoiled and 15 million was incurred as a result of faulty design. So tell me this, were you expecting that we will have a faulty design? So is this a normal cost? This is not a normal cost. Right? This 15,000 is not normal, and this 10,000 also. Were you sitting and expecting, oh, material will get spoiled? No. So out of 100,000, how much is abnormal? Out of 100,000, how much is abnormal? 15 plus, no, 10 is also abnormal. 10 is spoiled plus 15, both the figures. How much is abnormal? 25 is abnormal. So from 100,000, 25,000 is abnormal. Only the remaining will be capitalized. So how much will be capitalized? Only 75,000 will be capitalized. Because 25,000 is abnormal. Can you do labor and tell me, look at this note and see labor is 150. Who can tell me how much will be capitalized for labor? Labor is 150, but look at that note and tell me how much will be capitalized for labor. Let's see who gives the answer first. Very good, Shivangi. Only 141,000 will be capitalized because out of 150,000, 9 million was because work unexpectedly stopped because of these problems. Again, we were not sitting and expecting, oh, there will be problems. So 9 million we will pay. No. So out of 150,000, 9 million was abnormal. So only 141,000 will be capitalized. So far, how many what amounts are we capitalizing? The capitalized. Stamp duty we will capitalize. Legal fees of 10,000 we will capitalize. Site preparation we will capitalize. Materials out of 100,000 only 75,000 will be capitalized. 25,000 was abnormal. Very good teeth. General overheads we will not capitalize. Labor, again, as Shivangi said, 9,000 or 9 million, whatever you want to call it, because it is in millions actually, but just to make it easy, I'm saying 1,000. 9,000 is abnormal. So only 141,000 to be capitalized. Then architect's fees. Without architect, will you be able to build the building? No. You need to pay the architect to construct the building. So that is a cost that has to be capitalized because that is part of cost of making the building. So we will capitalize. What about general overheads? Tirth already told me what it is in direct message, but what do you people feel? General overheads, will we include or no? So totally, how much is it that we will capitalize? Who can total and tell me? Just quickly, total and tell me. 519,000. This would be our answer. And let's check if we have mastered it. Test your understanding 1. I'm going to the answer. I haven't seen the answer so far, so I don't know. But let's look at test your understanding 1. 519,000 is what we will include, and that is the answer that we got. That's it, guys. With that, you know now. Again, see who helped you? Your friend. So we need to go back and thank our friend because we got this answer right. Who was the friend? It was IAS 16. So never forget your friends who help you. Right? We will never forget IAS 16 because IAS 16 helped us. So because of IAS 16, this question became very easy for us. Right? Can we move on? Why abnormal cost? Are not capitalized. Is done. Then comes subsequent measurement. What do I mean by subsequent measurement? Subsequent in simple English means later. Subsequently means later, following, after. See, you have measured something in the financial statements. But at a later stage, now this is the new things that we are looking at, which was probably not explained in the demo. The question is this for subsequent measurement. The question is, once you've bought an asset, is it the end of the story? Will you never spend on that asset again? Tell me one thing. If you once you buy a building, is it the end of the story? You will never construct another floor, you will never construct another room. Never. You will spend. That's right. Sarah and Satakshi. Once you buy something, yes, that's right. Once you buy, you will definitely make some modifications. Maybe you will spend money later also on that asset. For example, you buy a car. Right? Now, somebody I know is all into cars and adding that, I don't know what's that called, turbo and all those things. Without the circles, my car looks like a hat. I think the circles are important. So you buy the car for, say, 10 lakhs. So you will capitalize this. But what you've done is after buying the car, you have done some further expenses. You have done further modifications. You have added this turbo thing over there. And you spent, I don't know, again, maybe 2 lakhs on that, for example. This expense is subsequent expenditure. Subsequent expenditure is money spent on an asset after you've bought it. Right? Money spent on an asset after you've bought it. An asset later, at a later stage. Now, this falls into 2 categories, guys. this falls into two categories. Category 1 is expenditure that will enhance and improve the asset. For example, when I added the turbo in the car, that was expense that will enhance the car. And second is expenditure that is just needed to upkeep the asset. That will be spent to just keep up the asset. Which of the two do you think we will capitalize? First one or second? Everybody should tell. First category is expense that will enhance the asset, improve the asset. Second category is expense that is spent in what? Second category is expense that is spent in just maintaining the asset. Everyone, I want everyone to type. Mariam, Nityashri, Priyanshu, Sandeep. Yes, it is the first one that will be capitalized as per your friend IAS 16. So again, even for subsequent measurement, your best friend IAS 16 is telling you that if it is enhancing and improving the asset, you will capitalize. And if it is just, maintaining it, will you capitalize? No, not capitalized. That is it. With that, subsequent expenditure is also over. Right? That's all. So subsequent expenditure is done. Subsequent measurement. Right? Now we will look at this textbook. Again, you will capitalize, should be treated as part of the cost of the asset only if it is enhancing the asset. Any expense that is spent in just maintaining the asset will not be capitalized. Now, one more thing I want to tell you here is, if at all there is an expenditure that is incurred as part of mandatory checks, mandatory inspection. For example, for a flight, you buy a flight, the flight is 10 million. And after that, after 1 year, it is mandatory to do an inspection. Without inspecting that flight, you cannot use that flight. You are not allowed to. Mandatory, it is needed to use the asset. Do you think we will capitalize or not capitalize? Without that expense, you cannot use the asset. So will you capitalize or not capitalize? You will capitalize. Yes, Mariam, that's right. Right? So let's look at illustration 2 now. So I hope IAS 16 subsequent measurement, just look at it for 2 minutes before doing illustration 2. This is as simple as it is, right? Just look at it for 2 minutes and then we will do illustration. That is all. Now let's look at illustration 2. Okay, a piece of machinery has an annual service costing 10,000. During the most recent service, it was decided to replace part of the engineering, meaning that it will work faster and produce more units. Okay, I'm sorry, I don't want to show you the answer. But yearly service, is it improving the asset, making the asset better, or is it just maintaining it? Yearly service. Every year you are servicing your car. Will the car become better? It will become faster, or it's just maintaining the car? Every year, no. Service will not improve the quality. Sorry, it will not improve the features of the car. It will not, it's just maintaining the car. If you don't service it, the car will go spoiled faster. So service of the car will not enhance the car. It will not make it from this many cylinders to that many cylinders. Right? It will not make the car more powerful. It will just maintain the car at how it is. So service, because it's just maintaining and it's not enhancing, you will not capitalize it. It will be expense. But we did a recent service. It was decided to replace a part. And if we replace the part, the car will get faster and produce more. And that replacement parts will be 20,000. This 20,000, it's making the car better. It is improving the car. So should we capitalize or should we not capitalize? Should we capitalize or not? Capitalize. And you have the solution in front of you. So look at illustration 2 for a minute. Now we move to the next part of the class, which is the next topic basically, which is depreciation. Now again, I'll explain depreciation with the help of a simple example. Say you buy a mobile for 80,000 rupees INR. The value is 80,000. The question to you is, after 1 year of using the of using the mobile, will the value still be 180,000? No, the value will drop. Why? Because you are using it. It is getting, used. There's wear and tear. Right? So here, there is a drop in the value of the asset. Maybe after 1 year, the mobile is worth only 60,000. Why? Because you have used it. There is maybe scratches here and there. Maybe it's become a little slower, right? So this drop in the value of an asset due to wear and tear is known as what? It is known as, instead of saying drop in the value of an asset due to wear and tear, oh, there was drop in the value of the asset due to wear and tear. You make your life easy. You don't need to tell that entire sentence. You will just say one word. You will say depreciation. Depreciation is what? Drop in the value of an asset due to wear and tear over the useful life of asset. This is what depreciation is talking about. Right? Now, there are various ways of doing depreciation. Right? There is straight line method, there is reducing balance. But again, we will start off with the sums and the numericals, right? And I will explain to you illustration 3. What is illustration 3? It says an asset costed 100,000. So the original cost was 100,000. It had a life of 10 years. And it says that after using the asset for the purchaser intends to use the asset for 6 years, at which the expected residual value. Yeah. So it says after 6 years, I'll make this question easier for you. After 6 years, how much would have been the total depreciation? Now, this is very simple. Your mobile is worth, I got answers already. No, after 6 years, Keith. After 6 years, how much would be the total depreciation? So you need 6 years depreciation. So you're using it for 6 years. You use it for 6 years. How much will be the depreciation for 6 years? You use it for 6 years. How much would be the total depreciation? It's a 3-line question. That's absolutely right, guys. Everybody is right. But again, for the sake of those who don't know, the asset is 1 lakh and there is a life of 10 years. So every year, the wear and tear will be, if 1 lakh, the life is 10 years, then yearly wear and tear will be 10,000. 1 lakh is for 10 years. So for 1 year, the wear and tear will be 10,000. So for 6 years, the wear and tear or depreciation will be 60,000. That's it. End of story. Right? So I hope everybody, this is Kaplan. Right? I hope everybody is clear and everybody is able to understand what is happening. Right? Now, guys, let's look at illustration 4. What is illustration 4 talking about? I'll tell you here. An entity purchased an asset for 20,000. So cost is, let's put it, 20,000. Straight line depreciation of 5,000 per annum has, so yearly depreciation is 5,000. We're assuming a 4-year life, meaning that 20,000 is the cost. We will use the asset for 4 years. So yearly wear and tear is 5,000. On 1st Jan, the annual review of asset lives was undertaken and the remaining useful life for this asset was estimated to be 4 years. Now that makes me go back to this box. And again, I'll not go back to the box, but I'll explain what it is. And I'll explain with the help of a simple example. I don't know if I mentioned in this class, but I bought, now this is real, okay? I bought my laptop, this laptop which I'm using to teach. I bought my laptop in 2018 June. When I bought it, I expected the useful life to be 5 years. That's all. I thought after 5 years, I'll have to buy a new laptop. But 2019, 20, 21, 22, 23. In 2022, 23, I started realizing that this laptop, even today, my laptop is as good as new. It is fast. It is good, very good. So, is it true that the life, the useful life, of the asset, is it true that is it true that it has to be exactly as you expected? Nityashri, Tia, Kishore. No. So the useful life could change. See, when we use state, the expected life will reduce. But what I'm saying is, in your day-to-day life also, sometimes you'll buy a mobile, you'll think you'll use it for 3 years. But after 3 years, you realize that you can use it for another 3 years. Or maybe you buy something, you expect it to work for 5 years. Maybe you buy some shoes. Again, I'm giving you a very, very basic example, but you buy shoes. You feel, oh, I'll use it for 1 year, but in 1 month, those shoes are torn. Does this happen or no? The useful life it's not necessary that it has to be as expected. It's not necessary that the useful life has to be as expected. Are you understanding? And that is what is happening here. We originally thought that the useful life is 4 years. But on 1st Jan, that is after 2 years of using the asset, we realized that I can use it for another 4 years. Let me repeat what is happening here. Right? So, see, bought the asset in 2023. Okay. First year, as usual, I depreciated. We said yearly depreciation is 5,000. The question is over here in blue. This statement is there. I bought the asset in 2003 and 20,000 it was. And according to that, depreciation was 5,000. So cost was 20,000. Depreciation was 5,000. So after 1 year, the carrying amount or the remaining value in the asset was 15,000. Right? After that, again, second year, again, we are depreciating. Again, 5,000 is the yearly depreciation. So how much is the remaining value or the carrying amount? It's 10,000. This is in the year 2005. Right? 2023, we bought it. I depreciated it. In 2024, carrying amount is 15,000. In 2025, carrying amount is 10,000. Then in 2025, what happened? We got to know that there is a remaining useful life of 4 years, another 4 years. See, originally we thought this, I will draw and explain. But what did we originally think? We originally thought that the asset will be used for 5 years. Okay, year 1, not 5 years, 4 years. Year 2, year 3, and year 4. After the first 2 years are over, in the beginning of the third year, when there are 2 more years left, we got to know that the life is actually extended. In 2023, you got to know that it is there for another 4 years. That is 2023, it will work. 2024, it will work. And the life has extended to 2025 and 2026. Are you all understanding this drawing? 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 Are you all understanding this First year depreciation was over as expected. Second year depreciation was over as expected. In the third year, when we thought there are only 2 more years, I thought only 2023 and 2004 is left. But I got to know that it is there for another additional 2 years. So what we will do is, now I know that this amount of 10,000 will not be used over 2 more years. It will be used over how many years? 4 years. Are you understanding? Therefore, the new annual depreciation will be 10,000 divided by 4, 2,500. Anybody, any problems with this illustration? Is it explained very clearly to you? All good? Are you understanding exactly what is happening in the question and in the answer? Everybody needs to type. Everyone fast? Clear, perfect. So I'm going to clear this. We've also done illustration 4 from the textbook. Now, the next one we're going to look at is overhaul costs. Major inspection and overhaul costs. Right? Now, this is a very simple concept, very basic concept. Okay. And again, oh my God, there are only 12 of you now. When we started, there were 21. Guys, let me just ask you this quick question. Are you all able to like pay attention, or like 2.5 hours, after 2.5 hours it's getting too much for you to catch? Teerth, you're saying it's getting too much to catch? How many? Either good or say too much to catch. Good or too much. Just type these two. Let me understand. Good. Okay, because generally in normal classes, some classes are like 45 minutes, 1 hour. After that, students get like distracted and they're not able to pay attention and all that. That's what I'm asking. Now, here, what is it that we are going to? Here, we need to understand that what is overhaul? Overhaul is a major inspection that is happening, and we will understand this with the help of illustration 5. An entity purchases an aircraft that has a life of 20 years with no residual value. The aircraft requires substantial overhaul at the end of 5, 10, and 15 years. Like a major inspection is needed. The aircraft costed 25 million, and 5 million of this figure is estimated to be attributable to the economic benefits that are restored by the overhaul. In year 6, the cost of the overhaul is estimated to be 6 million. So out of the aircraft, costing is only 20 million. Why do I say aircraft cost is only 20 million? Because out of 25 million, 5 million is estimated to be overhaul. And the aircraft has a life of 20 years. So 20 million with a life of 12, 20 years, and there is no value at the end. There is no, at the end of the life, the aircraft will be zero. Therefore, the yearly depreciation will be how much? So forget overhaul and all that. Just with this piece of information that is there in my notes, how much will be the annual depreciation?
It's 8 o'clock.
Who can tell me? 20 million over 20 years. How much would be the yearly wear and tear? Fast, it's very easy, guys. 20 million over 20 years. Yearly overhaul is how much? 1 million. That is it. Then comes the overhaul. If we go back at this, if it is a major overhaul, without which you cannot use the asset I mentioned earlier, if it's a major cost, you will capitalize it. Right? So we also saw this over here. Major inspection or overhaul should be capitalized and depreciated over the life of the asset. So this 5 million is a major overhaul that needs to be done. It's a substantial overhaul. Substantial means major. Therefore, the overhaul also has to be capitalized. 5 million. Remember, out of 25 million, 5 million is related to the overhaul. And it will be the overhaul. The first overhaul is for 5 years. See, the question says the aircraft requires substantial overhaul at the end of 5, 10, and 15 years. So every overhaul happens every 5 years. So it's like saying the life of the overhaul. I mean, there is no such thing as life of the overhaul, but the validity of the overhaul is 5 years. For 5 years, I will depreciate. Right? 5 years. So the depreciation charged would be how much for overhaul? 5 million for 5 years. How much would be the depreciation charge? Quickly, it is 1 million, guys. This is for year 1 to 5. Then from year 6 to year 10, again, there is a separate overhaul done. Again, cost of the aircraft is 20 million. We know this. Life of the asset was 20 years. So we know from before itself that the annual depreciation for overhaul for all 20 years is 1 million. There is nothing new in this. But what is changing is the overhaul depreciation. If you see overhaul for the second overhaul, see how much is the cost of the overhaul? 6 million. Therefore, here you will put 6 million. And the life of, or rather validity of the overhaul is how many years? I told you. Every 5 years the overhaul is happening. That is 6, 7, 8, 9, 10. 5 years. So how much will be the yearly depreciation for this overhaul, second overhaul? 6 million for 5 years. Let's see who gives me the answer first. 6 million is depreciated over 5 years. So how much is the yearly depreciation? Please sit with your calculators, guys. Yes, Mariam, that's absolutely right. The yearly depreciation will be 1.2 million. And therefore, that is illustration 5 for us. right? In case of year 1 to 5, the depreciation totally is 1 million for the overhaul and 1 million for the aircraft. So 1 plus 1, 2 million. But for year 6 to year 10, how much was the depreciation charge? 1 million for the aircraft and 1.2 million for the overhaul. Therefore, the depreciation from year 6 to year 10 is per annum 2.2 million. And from year 1 to 5, the depreciation per annum is 2 million. This is what illustration 5 explains. Just have a look, see if there's a problem. Let me know if there's an issue. You take in 1 minute. Let me know how is it clear, easy, clear, yes. With that, this is also done. The next thing that we will look at what is the next thing that I will? The next thing I will look at is revaluation of non-current assets. So far, today we've done 20 topics and we are in the middle of the second chapter. So most likely by the next class, which is when? Check, this is FR, right? Saturday. We will finish the second chapter and move to the third chapter. But here, what are we looking? We're looking at the revaluation of non-current assets. What does this say? When you have property, plant, equipment, the value of the property, plant, equipment would change. Okay? The value of the PPE, you are basically, it will change over a period of time. Now, again, what I will do is, I will just quickly recap on these 19 things that we've seen instead of starting something new and trying to finish it off in the remaining 10 minutes that I have. But today we've introduced FR. Today was the first class of FR, where IS 1 is just talking about how you present the financial statements and all the financial statements that need to be there. Just like in a series, in a show, all the episodes need to be there in place for the series to be complete. Same way, just the same way, financial statements, for them to be complete, all the set of financial statements need to be present. This includes the statement of financial position, the statement of profit or loss, the statement of cash flows, the statement of changes in equity. The next thing we looked at was exceptional item. These are items that you basically, it's something that doesn't happen on a day-to-day basis. This is a transaction that doesn't happen on a day-to-day basis, but it is still significant enough for you to record, right? Third is statement of financial position. This is simply a piece of paper of your simply a piece of paper that tells you three things. What assets does the company have? What equity does the company have? What liabilities does the company have? What is an asset? An asset is a resource that you own, right? Again, there are two types, non-current and current. What is a liability? A liability is an obligation, something that you owe, something that you give to somebody. Again, there are two types, non-current and current. Then statement of changes in equity. This is basically a piece of paper that tells you four things mainly. It talks about the share capital, share premium, revaluation surplus, and retained earnings. Then comes the statement of profit or loss. This is only answering, this is one piece of paper that is answering one question. And that one question is, what profits do we have? Then comes the introduction to financial reporting. I said that this is just like in your school, just like how you have to make a report card to tell to the student, to the parent, and to the other stakeholders how the student has performed. Same way for the company, you are making a report on how the company has performed, and that making of a report, that reporting is financial reporting, which you are learning in this paper from basics till the very end, right? A to Z, you're going to look at that. Then what happens? Then you have introduction to IAS. I said this is like your friend, right? Introduction to IAS. This is your friend, basically a friend who will help you throughout FR. How to recognize assets, how to. Now again, in specific, IAS 16 is what we saw today. But how do you measure items on the financial statements? How do you recognize them? How do you subsequently measure them? How do you revalue them? So for that, you have a friend, and that friend is IAS. Then we saw PPE. One specific friend that comes and helps you is IAS 16 and tells you how to deal with property, plant, equipment. When do you recognize something as PPE? Two criteria. First is it should get you benefit, future benefit. And two is there has to be a reliable cost. Then we talked about measurement of PPE. The summary of that is over here. What will you capitalize? What will you not capitalize? Then what did we look at? We saw test your understanding one, which is basically where you bought a property, we paid legal fees, we paid stamp duty, and we looked at what to capitalize and what not capitalized. Then I told you why abnormal costs and general overheads are not capitalized. Abnormal costs are basically those costs that are not expected. They are costs that aren't supposed to be incurred. And therefore, they will not be capitalized. They are incurred as a result of a mistake. They're not supposed to be incurred, and therefore, they are not capitalized. What is subsequent measurement? I just mentioned subsequent measurement is basically where once you buy the asset, you will, again, there would be certain expenses that you have incurred after it. Some of them you will capitalize, some of them you will not capitalize. If it enhances the value of the asset, you will capitalize. If it is just a cost of maintaining the asset, you will not capitalize. After which we just saw numericals, we just saw numbers. Are you understanding? For example, we saw illustration 2 after that, which was basically a very simple illustration. 20,000 is spent where the item is going to become faster and produce more units, therefore we are capitalizing that. 10,000 is a yearly maintenance cost, therefore we are not capitalizing it. Then we looked at what is depreciation. Depreciation is basically the wear and tear of an asset. Sorry, the drop in the value of an asset due to wear and tear. As simple as that. Instead of saying drop in the value of the asset due to wear and tear, you'll just say depreciation. Then comes illustration 3, 4, and 5. Illustration 3 was very, very simple, so we don't need to go back and look at it. Illustration 4 was an interesting example. I drew it and explained to you what does it say. Okay. And then I explained to you what is major inspection and overhaul. This is basically those expenses that are like, for inspecting the asset, without which you cannot use that asset. Those are major inspections, major overhauls, and they have to be capitalized and depreciated over the life. And that, in order to explain that, we looked at illustration 5. Right? Broke the question into 2 parts, year 1 to year 5, year 6 to year 10. And these are the things that we saw today broadly. 20 topics that we covered. Right? Now, the next topic that we are going to cover is revaluation of non-current assets. And we're going to look at things like grants. We're going to look at things like, again, grants. And we're going to look at borrowing costs, which is a very, 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 very interesting concept, borrowing cost, which we will cover and close on Saturday. Meaning that on Saturday, we will be finishing the 2nd chapter and moving to the 3rd chapter, which I think is impairment or intangible assets. Right? Now, guys, a few things is all of these things are obviously uploaded on your LMS. And of course, if you've obviously you were attending this class because you filled up the form. So you will get access to the LMS where you can watch, rewatch, and also it will mention that in each class, what have we covered. LMS access you will get, Kenny. It's been informed in the group that you will get it. Latest by tomorrow, you will get the access. So again, if you filled up the Google form, then easily you will get the access. That's why we keep reminding to fill the Google form, because the ones who haven't, obviously they'll not get the access. So in the LMS, you will be able to see which video covers which topic. So if at all any specific topic you don't understand or it is not easy for you, you can look at which video covered that topic. Oh, okay, statement of profit or loss was covered in the first video. So you can watch that. Second video, so basically it's like a table of contents. So in the first video, this is the table of contents. So if anybody has a problem in understanding, illustration 2 of chapter 2, they'll just go to the video, see that this isn't basically the second video, chapter 2, illustration 2 on subsequent measure. Depreciation calculation is in the first video. So before you, when you want to revise, you can just look at the contents of each video. And if there's any problem in any specific topic, you basically go and watch that video specifically. Are we understanding? Right? And in your LMS, your tests will also be assigned. Right? So weekly once you will have a test, which you can write at your convenience. However, you have to write it because it will come in the LMS. You will get notified. So if you want to perform well in the exam, obviously weekly tests you have to write. Right? The weekly tests will be from the textbook also. We will ask questions from the kits also, exam kits. And in class, I'll solve exam kit questions as well. Now, I was expecting somebody from the. Okay, so Kenny, we will give you details on this, on the fees for any other paper. So, as we've been saying, one paper, any one skill level paper is free. But the second paper, if you want to do, just again, what we have a hotline number that has been shared in the group. So whoever wants that information or any information, just drop it on the hotline number and not anywhere else, because then your message will be lost. It's there in the group. We've mentioned what the number is. Drop a message in that number and we will respond as soon as possible. With which it is 8:20 and we have the last 10 minutes. And as I mentioned, the last 10 minutes is basically where you will be given time to review these 20 things that you have noted down and rate your satisfaction and understanding out of 5. If you are 5 out of 5, you will put 5 out of 5. If everything was easy, comfortable, you will put 5 out of 5. If it was nothing you understood, it was like absolutely nothing you understood, you can put 0. So you all can put your rating out of 5 now before you leave. And if anybody is less than 5 also, you can put it. Please make sure that you put your rating out of 5, because this is an important part for us to know who is engaging and ultimately you need to raise your concerns. Only then we can help you. So all of you can now rate your understanding out of 5. Along with any comments, if you have also, you can add the comments. How is the class? Do you feel it is too lengthy? Do you feel after some time your attention was gone? Because 3 hours class, definitely people lose attention. Any comments also, if you want, you can add. Whatever you want to say, whatever feedback you have that you want to share with me. Obviously, we'll give you a feedback form, but any other feedback if you have, you can share it. Thank you, Udit. Thank you so much. Whatever in general, any feedback, anything you want to respond, if you want to let me know about the class, you can. Hitanshu Gohil, I didn't understand what is it that you're trying to communicate. You ask something? Oh, when can we get this kit? We'll go back. Can we get this cake plan and BPP exam? Yes, you will. On the LMS, it will be uploaded. Anything, your overall rating, any feedback, anything. We will go according to and as per the textbook, and everything as and when we come, we will be touching and completing. We will be doing the kits also. So you are having good practice for the class, for the exam. Again, the hotline number is there in the group. Anybody wants to do a second paper, anybody wants help with registration, anything, drop a message there. We go through that number, there those WhatsApp, just drop a message on WhatsApp. And we will see all the messages and respond to each and every message. So everybody is 5 out of 5. Nobody has questions. No questions, no doubts, no weak concepts, nothing you didn't understand. And what about like the length of the class? Is it getting like, again, I did ask this question, but is it getting like, 3 hours non-stop, you're losing your, is it like that? Perfect. Okay, guys, so that is all. There's no point, if you want to communicate, this time is used to communicate, to ask doubts and stuff. But if there is nothing, you can leave one by one. If there's anything you want to ask or say, what is it, Kenny? I didn't get you. Lecturer said we get later. What is that? What will you get later? LMS? Yes, of course. You will get it. Again, if you have questions, you can stay. If you have feedback, if you have any comments, positive, negative, you can put. If you're all good, you can leave. Hotline number is shared in the group. It's there in the FR group. We've shared it already. We can pin that number. I can pin it again for you. Okay. So it's already there, but if you don't find it, we will send you that number again. Yes, Archana, that's absolutely right. It's an Indian number, so obviously if you're outside of India, then it's going to be +91 before the number. In India, if you are in India, then great. But if you're outside India anywhere, then you add +91. Just letting you know. Yes, that's absolutely right. So Kenny, you have the hotline number. But again, if apart from Kenny, if few people have missed it, we will definitely reshare it. We will keep sharing again and again. Again, if you're okay, you can leave. If you just stay, if you have questions.